Your paycheck lands at 8:02 a.m. And for one quick second, it feels like relief. Then you open it. Your eyes skip past the big number and go straight to the one that actually matters, net pay. And there it is again, that painful gap between what you earned and what you actually get to keep. Over $1,400 gone before the money even touched your account. Federal tax, state tax, Social Security, Medicare. Nobody asked if you agreed. Nobody explained it. You simply worked, and part of your reward vanished before breakfast. On paper, you make $72,000 a year, but after everything is taken out, you only live on about $51,000. The rest is gone before you even hold it. A few months later, tax season arrives. You sit at your kitchen table with cold coffee and your laptop glowing in the dark. You open TurboTax and it asks if you have deductions. You think about your rent, your groceries, your car payment, and the fact everything costs more than it did last year. None of it counts. So you click Standard Deduction. 40 minutes later, the screen flashes green. Congratulations, your refund is $800. You smile. For a second, it feels like winning. But deep down, you know it isn't. That's not free money. That's your money they held on to for a year and gave back after deciding they didn't need all of it. At work, your coworkers celebrate like they hit the lottery. Refund season, free money, I'm buying a TV. But then you notice the guy in the corner office, the one who owns rental properties and always seems calm. He never talks about refunds, never celebrates, never even mentions taxes. And suddenly something clicks in your mind. Maybe rich people know something you don't. Maybe taxes aren't just rules. Maybe they're a game. And maybe no one ever taught you how to play. That night, you open your laptop and search one question that changes everything. You start a side hustle, and at first, it's just extra money. Then it grows. Suddenly, you make $18,000 in 1 year outside your job. It feels incredible because no taxes are being taken out automatically. For the first time, every dollar feels like yours. You spend it fast. A better laptop, a nicer desk, faster Wi-Fi, some nights out. Then April comes and reality punches you in the face. The IRS says you owe $4,300. Your stomach drops. You panic. Then you learn something nobody told you. When you work for yourself, you pay both sides of tax, your half and the employer's half. The system punishes you harder for trying to build something of your own. But instead of panicking, you learn. You start tracking receipts. That laptop becomes a business expense. Your Wi-Fi becomes a business expense. Your phone bill partly deductible. You measure your spare room and claim it as an office. You calculate part of your rent, part of your electricity, part of your utilities. You track your miles, every trip to the post office, every coffee meeting, every business drive. Little by little, you remove thousands from your taxable income just by paying attention, and your mindset changes forever. You stop seeing taxes as punishment. You start seeing them as strategy. One day, you spend $200 in 20 minutes online filing paperwork. By the end of the week, you own an LLC. Now there are two of you and the business, separate, independent, and suddenly the world changes again. Lunch with clients becomes deductible. Flights to conferences become deductible. Hotels, meals, supplies, subscriptions, all expenses. The business makes $110,000 that year, but after deductions, only $61,000 is taxable. You didn't hide money, you simply learned structure. Then you sit down with a CPA. She flips through your books, nods, and says calmly, "You're doing well, but you're still paying too much." She leans forward. "It's time for an S-Corp. You don't fully understand it yet, but you know another door has opened." Business changes again. You pay yourself a salary of $55,000 while the company earns $180,000. In the old world, you'd pay self-employment tax on all of it. In the new world, you only pay that tax on your salary. The remaining $125,000 comes as distributions. No self-employment tax. Just like that, you save $17,600 in 1 year by checking a box. You stare at the number in disbelief. That's months of labor saved by paperwork. Then you go deeper. You rent your own house to your company for meetings, tax-free income. You hire your spouse. You open retirement accounts. You move money before taxes can reach it. You no longer feel like an employee. You feel like an engineer building a machine. Every dollar now has a purpose. And then you realize something bigger. Income is nice, but ownership is better. So you buy your first rental property. Soon you own 3 units worth over $1 million combined. Every month they send you cash, but on paper, the government thinks you're losing money because of depreciation. The IRS assumes your buildings lose value every year, even while they're increasing in price. So while your rentals put money in your pocket, your tax return says you're at a loss. You are making money while appearing broke on paper. Then your accountant says, "We can do better." You perform a cost segregation study, reclassify assets, take bonus depreciation. Suddenly, you deduct $280,000 in 1 year. Your tax bill becomes zero, completely legal. When it's time to sell, you don't cash out. You roll the gains into larger properties. No taxes due. You're no longer just earning money. You're building momentum. You create multiple LLCs, holding companies, separate entities for separate purposes, one for operations, one for assets, one for protection. Money flows through your companies like water through pipes, moving from place to place with intention. Management fees, licensing fees, internal payments, everything structured, everything optimized. You hire tax professionals, attorneys, advisors. While others in your tax bracket lose nearly half their money, you keep most of yours, not because you cheat, but because you learned the rules. Then your thinking changes again. You stop focusing on income. You start thinking about legacy. You sit in skyscraper offices with attorneys charging $1,200 an hour. You establish trusts, move assets out of your estate, protect your wealth from lawsuits, taxes, and time itself. Now you aren't planning for retirement. You're planning for children, grandchildren, generations you may never meet. The money no longer belongs to you directly. It belongs to the structure. The trusts own it. You simply control it. The $800 refund from your first job feels like a joke now, like a memory from another species. One day, there is no paycheck anymore. No salary, no income, no refund, no income. Only systems, only teams, only structures, lawyers, accountants, advisors, assistants. You live off loans against your assets, borrowing money tax-free while your investments continue growing. Your wealth expands faster than you can spend it. Taxes barely touch you now, but it comes at a price. Every move requires planning. Every purchase requires strategy. Every decision requires consultation. You built freedom, but also responsibility. You won the game, but the game became your entire life. You are no longer just a person. You are a financial structure. And somewhere far away, a 26-year-old opens his first paycheck. He stares at gross pay, then net pay. He sees the missing money and feels frustration burning in his chest. He thinks the problem is taxes. He has no idea the real problem is ignorance. He thinks he's beginning adulthood. He doesn't realize he has just entered the maze. But one day, he'll understand. One day, he'll start asking questions. One day, he'll realize the system was never hiding from him. He simply never knew where to look.